Thanks for joining us at XM.com. You're watching today's market comment by Refuya Jian. I'm Cristina Marujos. Markets remained in a cautiously risk-on mood on Tuesday as hopes that China's economic meltdown is stabilizing and that central banks are nearing the end of their tightening cycle shored up sentiment ahead of some key events lined up this week. Traders are anxiously anticipating the August inflation report tomorrow and retail sales on Thursday for clues on what the Fed will decide at its policy meeting next week. The European Central Bank will have the honors of kicking off the 10-day central bank bonanza on Thursday. Markets are split as to whether the European Central Bank will raise rates this week, and should they press ahead with a 25 basis points hike, investors would likely ratchet up their bets of further tightening by the Fed also. Either way, the Fed is not seen as having a lot of firepower left, and this has put a halt on the rally in Treasury yields, at least for the time being, giving Wall Street some breathing space. Both the S&P 500 and Nasdaq have rebounded from August two-month lows, with the latter being boosted from a jump in some big tech names, the latest being Tesla. The spotlight today will fall on Apple as the company is set to launch its latest products, including the next-generation iPhone. But equities were somewhat mixed today in Europe and Asia as U.S. futures turned red. In FX markets, the U.S. dollar clawed back some of the prior day's losses, and this was slightly firmer against the Japanese yen. Japan's 10-year government bond yield spiked to the highest since January 2014 on Tuesday, following comments from Bank of Japan Governor Kazuo Ueda, who alluded to the possibility of ending negative interest rates by year-end if there is enough data to indicate that inflation and wages are rising sustainably. Even 2023 star performer, the pound, hasn't been able to put much of a fight against the greenback in this latest round, as the Bank of England has hinted that UK rates are close to peaking. Yet job numbers released earlier in the session highlight the dilemma facing the Bank of England, as employment in the UK fell more than expected in the 3 months to July, but average earnings accelerated. Sterling has fallen back below $1.25 today, while the euro slipped to $1.0715. Thank you for watching today's market comment here at XM.com.